You've got to work hard for your success, and you've got to have a steady presence. That's the secret. Kid Rock, one of the hardest working guys in the rock business. And my friends, our steady presence is our 10 to 15 minutes a day in the market, tracking your favorite ETFs and stocks. We're going to go over the big four that we track every day. And again, you can add your favorite stocks and ETFs to it. What we do here works on trackable stocks all the time. You want to know what trackable stocks are? That involves backtracking. In fact, I'm going to put the backtracking training at the end of today's video just for you. Of course, read our book, follow us, become a Patreon member. Patreon members, remember, this Wednesday, 12:30 Eastern Standard Time, we will have our live Patreon monthly call-in session. Go ahead and send your questions, the stocks you would like us to backtrack and look at for you for practice trading. Can't wait to join you this Wednesday. You want to become a Patreon member and be involved in that? Any of our 3 levels of Patreon support will get you into that. You'll also receive, guess what? The 3-part training, Options Made Simple, the Charting Wealth Way. Let's jump into this market. We see the S&P up 1.22%. In fact, everything up for the day as we slide into the November election on Tuesday. Tuesday is going to be an interesting day. We'll see what it shows. Now, what do our charts show us? This is interesting to watch. Look at how the Heiken Ashi candlestick has started off for the week. It is actually going down. Price percent oscillator is negative. We had that weekly vertical crossover going down at the end of this last week, and we have a red down candle forming. Look, it's so hard to even see what last week's candle looked like. You can see as I move out of the way for those that are watching, I moved the 2-day trend line and the weekly because they were laminated. We haven't reached the lower low that we hit last week yet, so we'll continue to watch and see how things continue to develop. Like I said, it was up for the day 1.12%. That doesn't negate the fact that we are in a crossover going down, price percent oscillator pulling away from the red signal line, derivative oscillator gaining downward momentum. Let's look at the first day on the latest 2-day candle. It's a slowdown in the down movement. It's not a green open box up candle. It's a solid green, which again means a slowdown in the down movement. And again, I need to reset our 2-day trend line. Let me move that back to when it crossed over. I screwed that up just a second ago so I could show you what the wick looked like on the bottom. But again, we see the price percent oscillator losing a little bit of that downward momentum as we start the week off. The derivative oscillator still hammering down. Go to that half-day chart. We see things popping up in the morning, sliding off in the afternoon. Price percent oscillator still negative on the half-day chart. Moving up, derivative oscillator losing downward momentum. So we'll continue to watch and see how this week makes out. But we do have a great disparity between the signal line and the price percent oscillator, which is still going down. Depending on the results of the election, of course, things are subject to change, but that's what our overall mood is, and that's the way we ended the month of October. All market crashes begin in October, it seems. And this, I'm not saying this is a market crash, but I'm saying we did have a crossover going down at the last possible moment on the S&P. We leave the S&P, go to the Qs. What do we see there? Well, that crossover going down goes all the way back to the 18th of September, the week ending then. Went down for another week and then popped up and started moving over, going down for the week ending the 30th. Again, another strong down candle. We're forming this week with a red down candle forming. Price percent oscillator pulling away from the red signal line. Derivative oscillator gaining downward momentum. The NASDAQ 100, which is what the Qs represent, was up for the day a little bit, 0.22%, but again, still that heavy pail of downward momentum pushing. Look at the 2-day chart, not hitting a lower low yet. We do see it getting awfully close to that. Let's just check out how close. Low was 266.97, 267.07. So wait a minute, we did hit a lower low during the course of the day. Yeah, we did, just barely. Sometimes it's hard to tell. That's why I wanted to look. We do see the derivative oscillator gaining downward momentum, price percent oscillator heading down, half-day chart. We see where you had lots of indecision, slowdown in the down movement in the morning, then continuing on in the afternoon. That's where we plumbed the depths and actually went lower than the prior week. Price percent oscillator heading down, losing some of that downward momentum, as is the derivative oscillator. So we'll continue to look at things, pay attention. Both of our major stock indices are still down, and with lots of downward pressure on that weekly chart on the S&P and the Qs. Now we leave and go to bonds. Bonds up for the day 1.01%. Bonds are still in a confirmed down move also. Price percent oscillator heading down, derivative oscillator gaining downward momentum. Red down candle starting the week off, but not hitting the lows that it hit in the prior, 2 weeks. We go to the 2-day chart. What do we see there? We had a red spinning top. First day of the latest 2-day candle, red down candle, not hitting the lows as before. Price percent oscillators flat, still negative. Derivative oscillator losing downward momentum. Go to that half-day chart. Saw the crossover going down there, and then what happened? Spinning sideways pretty much in the morning and the afternoon. We have dojis almost. So again, lots of indecision in bonds. What does that mean to us? Well, if stocks start to crash, we can expect bonds typically, once the sell-off occurs, margin calls are taken care of, to start spinning up. So we don't know that that's going to happen, but we'll continue to watch and see. We typically like the market to move this way. If stocks are going down, we like bonds and gold to go up. If stocks are going up, we like bonds and gold to go down. We like them to move conversely in a healthy market typically. Why? Because when stocks aren't doing good, people tend to want to put their money in a better store of value, which might be bonds and or gold. So that is the reasoning behind that. Now, what do we see happening with gold? Gold up for the day, 0.97%, about 0.5%. But look at what gold has been doing for the last many weeks. It has been sliding sideways. We had that weekly vertical crossover in gold going down back on September the 11th, the week ending Friday the 11th. Then had an up week, and then things really hammered down in gold on the week of the 25th. Got us our 2% or so there for a decent trade. And then what happened? And again, a decent practice trade. Then things sort of slid sideways since then. Price percent oscillator still going down. Derivative oscillator losing some downward momentum. Go to the 2-day chart. What do we see there? Well, of course, that 2-day chart has been negative since before the weekly vertical crossover. We have to go all the way back to mid-August for that crossover. And we have seen it run parallel for a while, then dip over the last 2 weeks. This week starting off with a green up candle. So we'll continue to watch. Derivative oscillator still gaining downward momentum. Price percent oscillator flat. That's just the first day of the latest 2-day candle. That's subject to change. Look at what we had happen at the end of the day, though. We've seen since when? Since the slowdown in the down movement stopped on Thursday afternoon, up on Friday morning, sort of leveling out Friday afternoon, up on Monday morning and afternoon. So we'll continue to watch, see what's going on with gold, which way it's going to go. Now, if the market starts to really hammer down, we might see gold switch over and start moving up strongly. I don't know which way it's going to go. That's why we're sitting here watching, waiting for everything to come in, keeping in mind that the overall weight with that weekly vertical crossover this last Friday on the S&P 500 is still there with lots of downward pressure. The same with the Qs. Whenever we see the S&P 500 and the NASDAQ 100 heading down, price percent oscillator pulling away from the red signal line on the NASDAQ 100. Same with the S&P 500. Remember, that's where the pressure is. The big wave is what controls. All things being equal, the market tends to move in the direction of the largest chart. These are crazy times, my friends, lots of volatility. So again, best time for you to practice trade and to learn how to read these charts. Again, thank you so much for all of you who supported us by purchasing the book, Becoming Patreon Supporters. And for free always make sure that you are subscribed to our daily market reviews, once a week, weekly market review. That is where you get all of our special trainings we put out every day. We've got a great one for you today, how we use complexity theory in investing and trading. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. Vote, 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 vote.